You're now tuned into the Money Level Show.
Hey everyone, welcome back to the show. Happy to be back here live from the World Symposium and here again with my friend Scott Melbye. Man, you always got the cool socks on, you know.
Thank you. It's my style statement.
Yep. That's good. I've been seeing some golf socks, and I've been thinking about getting into golfing lately. So that's kind of next on my list. So I may have to get some golf socks.
That's good. You'll be frustrated with that game for the rest of your life, but you'll have fun.
Yes, for sure. So a lot has been going on in the uranium sector. I mean, we had a big bill passed that really addresses some of the red tape for mines and licensing and all of that, which that's been an issue for years.
Yeah.
And so it seems like, well, I mean, from what I see, there's a lot of progress. I mean, obviously last year we had the big AI data center news come out, and that got priced in, but I don't think we see the magnitude of that.
Well, it got priced in and then it got priced out when the DeepSeek story came earlier in the year, which
that is true.
the Chinese were telling us, no, we're not going to have the infrastructure build out for data centers like we think we are, which was a complete false narrative, which we know is not happening.
Yeah.
That the data centers and the tech and hyperscalers are building at an incredible rate and consuming incredible amounts of energy, and they're turning to nuclear for a lot of that. So yeah, we kind of overcame that at the early year. It was a slow start for uranium equities, but now since April, really the fundamentals, as you know, we've talked about, have never been better. The supply and demand, the geopolitics, the Trump executive orders. I mean, that's historic.
Yep.
It's like Dwight D. Eisenhower's Atoms for Peace in the 50s, which really kicked off commercial nuclear power. This is really that policy statement for the United States. And we know it's all for nothing if it's just words or slogans. But President Trump, always, you can say what you will, if you like him or dislike him, he does what he says he'll do. And there's a lot of really actionable items in those executive orders, like reforming the NRC to build nuclear plants, not over 10 or 15-year timelines, but getting them licensed in 18 months and on the grid, because we need that power and we need it quickly. But other things in the executive orders were supporting uranium mining, conversion, enrichment in the United States, siting small modular reactors on defense sites. So it's really, the president's opened the door for the industry, and now it's incumbent on us to step up and pass through the door and make it happen.
Yeah, and I got into this thesis and trade back in 2021, late 2020. And I've seen the sentiment change significantly. I remember I had a friend, we had a conversation with her, and I was just geeking out on uranium, and we had a talk, and she had a question my ethics on how I invest and everything. And I said, watch, I'm telling you, uranium is going to be the future. And then now we're here, and so it's pretty telling.
There was a time, I mean, honestly, someplace like over in Europe where they really didn't consider nuclear green energy, and it was kind of put in a basket of gambling, cigarettes and prostitution. And now we've gone from that to being, the darling of the political left and right because of the baseload resilient, affordable power and the fact that it generates green energy and carbon-free energy. It's nice to have, in our country, Democrats and Republicans agree on very few things, but they love nuclear power for different reasons. But they're there for us. And that's how you've seen a lot of these policy developments. And it is translating in public opinion. Everyone realizes we're in a high-tech society that requires electricity, and data centers are just a fraction of the increase in energy demand we're seeing in the developed world for the first time. This was always an emerging market story about India and China. Now it's about Europe and the United States needing baseload generating capacity again. So it's a good time to be invested in uranium.
Mm-hmm. Yeah. So thinking about the data centers and that increased the demand significantly, right? And this is, I would say, a relatively new development, or at least it's been reported.
Definitely new, yeah.
And so how does that change the dynamic? Because like there was the forward projections of, later this decade where the demand is just not going to meet the supply. It's going to be a significant gap.
Yep.
So did that compound on top of that?
It absolutely has. We really, as an industry, haven't factored in the growth from SMRs, advanced reactors, and this sort of data center growth into our forecast yet. I mean, we being like the World Nuclear Association and industry analysts see nuclear power on track to double by 2045. That's from existing large reactors that are in operation and those that are being built. Any of this SMR advanced reactor demand is on top of that, and that's how the World Nuclear Association, 31 countries, 14 banks, 140 companies, and all the hyperscalers in the tech world have pledged to triple nuclear power by 2050. That sounded kind of aspirational until now you look at it and go, well, we're already on track to double, and we haven't even factored in this next wave of reactors. So incredibly encouraging, because we're already in a deficit over the next 15 years of 1.7 billion pounds. That's mines that need to be built and brought online to fill that gap. And in the past, that deficit didn't matter because we had inventories, secondary supplies. Those inventories are largely gone. I mean, what's being traded in the spot market is kind of the churn of trader activity. There aren't a lot of fresh pounds going in to that churn, and you are seeing, like when Sprott comes in and buys $200 million worth of uranium, regardless of what the impact is on the spot price, it removes that 2 million pounds that aren't available for the next wave of purchasing. So I'm very bullish on the next 6 months. And if, I'll stick my neck out and say we'll see $100 a pound by the end of the year. And that's a big, bold statement considering we were stuck at 60 to 70
takes a lot of conviction
for several
right
months. But that's not based on just emotion or hopeful, wishful thinking. It's just really looking at the nuts and bolts of supply and demand, and the utilities having really been absent for the market for really upwards of maybe more than a year. They have to come up for air, and that's going to happen in probably going into the fall. The World Nuclear Association in London in September, utilities get more active, and they're going to find the market's very thin in the long term. And if they don't like what they see in the long term, their only choice is to buy spot and hold it. And that market really isn't equipped with the liquidity to handle that kind of demand. So, it's going to be a very good year for uranium equities in 2025.
So when you say $100 per pound, where do you see like I'm thinking you're talking spot.
Spot, yeah.
Where you seeing term eventually?
Well, that's what's great is, there's so much talk about, the long-term market is only what's relevant and spot is irrelevant. No, they're both very relevant. They're just different. Long-term market, the quoted price currently of 80 to 85 is what a producer is willing to sell under a hedged long-term contract and a utility is willing to buy. The spot market is just, if you want to buy 100, 200, 300, 400,000 pounds of uranium for delivery within 6 months, that's the price. Sometimes we like that spot price. Sometimes we hate it because traders are weighing heavily on it. But if you have a true shortfall in a deficit in this market, it's going to manifest in the spot market and the long-term market, and they're going to play off of each other. If you have the spot increasing, upwards to $100 a pound, you're not going to have the long-term price sitting at 80 or 85. And already we're seeing evidence. There was a large Chinese contract from the Chinese mining company to the Chinese utility priced at 95 escalated in the last month. So it's already beginning to happen, but they do influence each other. And right now that's an upward spiral.
So, so you know this, but markets can be irrational.
Yep.
At times, and
especially equities markets.
Yes,
I understand the uranium market, but equities, I'm confounded by it all the time.
Yes, and so what I've been seeing mostly is like companies that are looking at the newer technology, small modular reactors. Companies that come to mind, Nano Nuclear, Oklo, a few others, but in the share prices have been just going bananas.
Yeah.
Right. But they don't have like the the pounds of uranium has to get to those to even function. And so, when you're looking at the miners and such, and so I'm kind of wondering, like, okay, that's like a disconnect. It's, because these folks are, getting the stuff out the ground and delivering them to these technologies that are look promising, but they aren't necessarily fully built yet or licensed and all of that. And the share prices are just going crazy. And so, could you speak to that? Like, just, you don't have to speak to that specific company, but just
either the
general
reactor vendors and those technology companies that are building the SMRs or their customers are going to need to source that uranium. And I think what's encouraging is we're spending a lot of time with the SMR companies. In Uranium Energy Corp's case, we struck supply cooperation agreements with both TerraPower, the Bill Gates Natrium reactor that's being built in Wyoming, and with Radiant, which is a micro compact reactor that's being built. It's kind of a Peter Thiel-backed company. A lot of the folks that came out of SpaceX are building these micro reactors. They recognize that they're going to need to have relationships. There's a game of musical chairs that's ongoing right now, and the empty chairs represent available mine production. Those chairs are getting filled up, and if we are in deficit, it's going to get to a point where some come late to that game and don't have a chair, and then they're going to have to live off the spot market, and that could be whatever the market will bear. But we're so thrilled to have these tech companies come in. Let's take Radiant Energy. They're building 1 megawatt micro reactors that are the size of a shipping container. 4 of those containers can be sited together for 4 megawatts. These are designed by, Doug Bernauer was the designer of the Dragon capsule for SpaceX and worked for Elon Musk. When he successfully built the Dragon capsule, went into space, landed back on Earth, and even the booster rocket lands back on the pad, it wasn't a stretch for Elon Musk then to ask him, all right, I now need a source of energy for the Mars colony. And so Doug Bernauer went out to research how do we produce power without being able to ship bulk fuels to Mars. And he came up with small micro reactors like this. And rather than demonstrate them in space, let's build them on Earth. And so I just find that tech innovativeness and energy intoxicating. And we want UEC to be aligned with those kind of companies. We don't know where they're going to go, but we just want to be aligned and be supporting them.
And so what does this also mean for like the economy? I was talking with a kid not too long ago, and he said he was going to school and he was going to be a nuclear engineer. And so we started kind of having some conversations and such. And so I was kind of wondering, like, with this sentiment change, are there more people coming in for like jobs in these arenas, or
there's huge workforce needs, and the executive orders that President Trump signed recently also address that. But we need, the enrollment in our nuclear engineering programs. I work with the Colorado School of Mines, but schools like Texas A&M, Penn State, these schools, I think, will really, and it's like anything. Engineering jobs go through waves. Sometimes we need petroleum engineers, sometimes we need mining. But right now we need electrical and nuclear engineers. And if they see a future, of which there are plenty of jobs now. So if you graduate with that nuclear engineering degree, you're going to get 6 job offers. And I think to a lot of young people that I talk to at Colorado School of Mines is they want to do this. Obviously, they want to do cool science and build amazing machines as engineers, but they also want to change the world, and they see that being able to provide abundant, resilient, clean energy as sort of a societal good. And so I don't think we're having trouble. We just need to get them in and churn them out in big numbers if we're going to have this kind of growth.
Yeah, for sure. So transition into uranium royalty. I love the royalty streaming model. Especially when you think of like how taxing mining is, and in terms of like the cost and there's just a lot of
mining's hard.
A lot of things that can go wrong there too, And so I'm heavy into like gold royalty and streaming companies, and so uranium royalty is the first and to my understanding, the only
Yes.
uranium royalty company. And so, what is that looking like for the organization now? Because being the only one
Yeah.
and having less risk with the mining aspect, are people catching wind to this, or like what's happening?
They are. Listen, we didn't reinvent the wheel. We just saw the enormous success that Franco-Nevada, Wheaton Precious Metals, all these base and precious metal companies in the royalty and streaming space were doing. They're extremely attractive, diversified way for investors to get exposure to a commodity. And for mine developers, we're basically a capital provider to new mine developments, and the goal is to be competitive and the lowest cost of capital option alongside debt and equity. We launched this company at a time when the uranium industry was still in a bear market. A lot of mines weren't in production, and there weren't a lot of building of new mines. That's all now changed, and we're seeing an enormous pipeline of new business opportunities where if you're a miner, you're 25, 50, 75% along the way to starting up your new operation, and you need your next 25, $50 million, and you've been at a 52-week low like we were earlier in the year. Suddenly, royalty and stream is a very attractive option to, doing a dilutive equity raise or going to banks with high interest rates. So, very optimistic. We're, continue to grow the portfolio. We're currently 25 royalties on 22 projects. We have about 6 or 7 really great opportunities on the go in, all parts of the world right now. We're looking at byproduct of copper, gold, nickel, where we can be the uranium component of those operations that aren't really focused on uranium. But it's a target-rich environment right now for new business. So very big priority for me as management and the team is to grow the portfolio.
Mm-hmm. So right now, in this model in particular, like the margins are typically high, because, I've met most of the staff on uranium royalty and
it's not a big company. There's only 6 of us.
As you add new companies, like it's like, okay, now we got to service this many more contracts or whatnot.
Yeah.
So what's the margins like right now?
Well, for us, we kind of look at internal rate of return on new projects, and we were very fortunate. The deals that we struck to date, and in the foundation of the IPO, a lot of those were done at certainly under 0.5 P to NAV, and a lot of them at 0.3 P to NAV. That's because we bought at a very low point in the cycle. Obviously, things are a little more competitive now, but we're looking at internal rates of return that could be for a sure thing, if there is such a thing in mining, that is a very near-term producer and very low risk to successful operation. You might see high single-digit rate of returns, whereas other more risky jurisdictions or time to development, you might be looking at something in the mid-20s. And so every project's really different. Yep. It's all there's no target hurdle rate because every project's different.
Yeah, gotcha. And then what does this look like for as the company continues, like some which the uranium mines are a lot different than the gold mines. I mean, some of the gold mines have just been operating for a long time. So, the model's the same with royalty and streaming, but it may look different with some of the projects. What does it look like right now with cash flows and then what is the company planning to do with the cash?
The other benefit of the market being strong and the pricing in the long-term and spot markets being robust is we're seeing a number of our portfolio projects returning to production, ramping up production, and so we're now beginning to get into that steady state cash flowing phase. Still at the beginning of that, we've got McArthur River, which is paying out about $1 million a year in physical uranium. That'll go up with production and price in the market. Cigar Lake will be a really good one for us. It's operating, but it's a net profit interest. So we still have about 2.5 years before that expense bucket works down. And then, between Cigar and MacArthur, we could be 5 to 6 million a year just on that. Langer Heinrich is in production out of Namibia. We have a small cents per pound royalty there. Lance Peninsula is a 1% royalty on that project in northeastern Wyoming. Of course, the build out of the central plant has been slow and delayed. And that's a good example is we're only as good as the counterparties that we interact with. And if they're successful, we'll be successful. But that's what's important in the due diligence is that we identify the best opportunities. And when we identify those opportunities, we really scrub the mine plan, the geology, the resources, geopolitics, and determine what's the right price. It'd be easy to, we could add lots of new royalties if we're willing to overpay for them. And that's not where we want to be. We want to be disciplined. And having people on the staff that have had decades at Cameco in mine engineering and geology and in my case, the markets and is really a key strength that we have.
Yeah, for sure. And then, and so also with we have pounds of uranium. And when I say we, you all are shareholders. So if you own shares,
you have pounds of uranium.
You're part owner of the company, which means you own some pounds of the company. You own some pounds of uranium.
That's absolutely right.
So we have pounds of uranium as well, physical uranium.
We have 2.7 million pounds that we bought at $20, $30, $40, $50, $60 a pound. So as we sit now, we have 2.7 million pounds at an average cost of just under 60. And that's our war chest. That's our, instead of just having our cash parked in CDs, we've parked our cash in uranium, which has appreciated substantially. So it's been a great investment. And it's fairly liquid to be able to turn to cash. When we get a royalty deal and we need 10 million pounds, we'll sell a couple 100,000 pounds to finance that. So it was an opportunistic strategy. It's not something I think we want to do long term because we saw uranium was way undervalued, and being able to buy in the drum at the warehouse where the utilities need it below global production cost was a no-brainer. Now I think we want to turn those pounds into cash, and the real secret sauce of royalty companies are the royalties themselves. So think less physical uranium, more royalties going forward, but it's been a really successful strategy for us.
And what would be like, obviously you wouldn't want to sell those pounds at just any price, right?
Yeah.
So what are you projecting? Like, okay, this is where, we would probably offload some of that.
Yeah. Well, we definitely don't want to sell into any time or period in the spot market if our presence as a seller had a negative impact. We would just turn to other options because our interest is higher prices, not lower. So we're very selective. We do have, having 42 years, a lot of great relationships where our only option is not dumping material in the spot market. We can go to strategic partners and do off-market deals and achieve the same, pounds to cash transaction. So I don't see it as a challenge particularly, especially the kind of volumes that we would be selling are pretty minimal. Yeah.
So it sounds very promising, with just the future projection of where the company's going to be, and even obviously being the only royalty and streaming company in the uranium sector, comes with its own challenges and things that need to overcome, and so it's good to have that in perspective as well.
Yeah.
Because typically, even when I go into gold and silver royalties, it's pretty, I guess, straightforward in some ways.
Well, I think it's easier.
Yeah,
you have
easier.
so many gold projects, so many copper projects. The universe of potential deals is much larger, and you've seen all the M&A activity in royalty space lately. I would love to be able to go acquire a company and instantly add 10 royalties to my portfolio, but there isn't any, we're the ones with the royalties. So we have to do the real serious legwork to uncover existing royalties that might sit in family trusts or in corporate entities, remnants of M&A transactions. So it's a lot of kind of legwork and experience in the industry that allow us to do that. And then on the new mine financings, it's getting on planes, going to Africa. I've been on the continent twice this year already. I've been to Australia. It's really establishing relationships with the CFOs and the CEOs and saying, hey, when you need mine development capital, just don't immediately go to the capital markets or banks. We're another competitive option.
Yeah, so this is almost like Franco Nevada.
Yeah.
You know, early days. Were they the only?
That would be our dream. That is our spirit animal is Pierre Lassonde and Franco Nevada. So absolutely.
Were they like when they first started?
I think so. I mean, I think they really. I think it was a royalty that they acquired out of Voisey Bay, I believe, and kind of parlayed that and just the incredible growth. Since then, they've really been an incredible success, and they've had some bumps in the road. The mine in, where was it, Panama, that gave them problems, but yeah, they're incredible. We've tried to emulate them every way we can.
Yeah, speaks to the potential.
Yeah.
Of uranium royalty being the first, being the only develop, and getting these royalties and such going with these mines. So. Yeah, so it's exciting.
Yeah, well, it's going to be. I mean, for those that are invested in the uranium space, I know the start to the year was really challenging with uranium equities off, but already you've seen since April, kind of anywhere from 30 to 100% gains already, and we're very early stage. And I think 2025 will be an epic year when we go into New Year's. Parties, you're going to be telling your friends how well you did on your uranium investments. And that's not based on just wishful thinking. That's based on the fundamentals. The market's really set up for some serious gains here. So happy investing.
Yeah. Boogeyman, it just keeps coming back. Like you think you got rid